Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 13th of February. Starting off with the FTSE 100, which has hardly moved over the last few sessions. We're just resting above the 200-day moving average, currently around 75.45. And if you look closely, you'll see that actually the good news, if there is any good news with the market hardly moving at all, is the way that we bounce, or we are bouncing without having to touch that 200-day line. So a slight show of strength there. But with the RSI below 50, just in the upper 40s, the bias is still to the downside, and there is the risk of a break of the 200-day line, leading to the floor of that rising trend channel from August at 74.54. On the upside, the initial trigger would be an end-of-day close above the 50-day moving average, currently around the 7,600 level. Moving on to the DAX, where things are hopefully not quite so pedestrian. We have got a bit of a block there at 17,000, and that suggests that we might have to test not only the floor of the rising trend channel from back in October, around 16,800, but go down to the 50-day line, 16,700, before a fresh leg to the upside can begin. In terms of the potential upside, it would be up to the top of that rising trend channel at 17,900 by the end of next month. Although it has to be said, this wall of resistance at 17,000 rather suggests that we'll have to test support in the mid-1600s, maybe 16,300 or 400, which was the little floor there back in January. Moving on to the Dow, and here still a defined performance, upwards almost every day at the moment. I think 12th record high in a row, but the rising trend channel here heading towards 40,000 by the end of next month, while we're above recent support and the floor of the rising October trend channel around the 38,100 level. Worst case at this stage is that we might have to have a rug pull down to the 50-day line at 37,500, but obviously the way things are going, still looks as though we could stretch a little bit higher. On to Bitcoin, where everyone and their mothers told us that this market has reached 50,000, as if we can't check the price ourselves. Here you can see that we've got that rising trend channel from back in August. The top of the channel heading towards 52,000. We were looking for that by the end of next month. Obviously, at the moment, it looks as though we'll get that by the end of this month or even sooner. And clearly, the old resistance of 49,000 from last month now hopefully will come in as new support. But 52,000 there as a potential target for now the end of this month. If you're a fan of this market, and there's one or two fans out there, then the next level up would be that October resistance line projection heading for 60,000 by the end of next month. On the downside, 46,000, the resistance on the way up, so perhaps a little bit of support there if we get a rug pull, which obviously with this market there is always that danger. Moving along to gold, which is settled in to look almost as miserable as the FTSE 100. We managed to break that resistance line there from December and then break back below it. So that is a false flag. We've got a new level to break there around 2060. Below the 50-day line around 2043. There's the risk now of a test of the floor of that rising trend channel from March, around 1995. RSI has failed at neutral 50, so that does also suggest we might have to brace ourselves for a move below $2,000. On to the stocks, and starting off with Argo Blockchain, which obviously with the crypto, or at least with the Bitcoin above the 50,000 level, we're obviously feeling that this is going to be a good situation. So far we've had the bear trap gap reversal, one of our more reliable signals, perhaps the most reliable signal, and 3 strong days of moves after the gap higher. We have been previously targeting the top of the gap down back in January, around 27 pence as the target, and that's what we're looking for at the moment, while we remain above yesterday's support area around 19 pence. On to Cornerstone, which is doing big things in Canada, which is obviously very exciting. Here we've got a wide rising trend channel Surprising maybe that shares haven't done any more than they've done already today, but obviously that is the current state of the market. But the overall picture here, maybe on a 1 to 2 month view, is that we could head towards the upper 40s, maybe 47, 48 pence by the end of March, while we remain above the 50-day moving average in the floor of the channel there at 26 pence. So maybe a slow burn there for Cornerstone. On to the Aquis market, and we have the situation at Coinsilium next. Here obviously benefiting from the latest crypto boom, and here we're looking for, rather simply, a move to retest last month's resistance around 3 3/4 pence, while we remain above the sharply rising 50-day moving average at 2 pence. Yesterday gave us an end of day close above a sharply rising 50-day line, and that bear trap rebound, normally a decent signal, and it already has been in this case. Moving along to EQTEC, which has been a rocky horror picture show over the recent past, but at least today you can see the shares have managed to gap through the 50-day moving average, at least temporarily. That's around 2.9 pence, so that gives us the idea that we need to see an end-of-day close above 2.9 pence to allow the shares to retest the dizzy heights of last month around the 4.7 pence zone. This stage, early and end-of-day close back below the initial February resistance at 2.63 negates the idea of a potential turnaround for EQTEC, however temporary. Moving along to a stock which hardly anybody looks at, and here it is today though, Intuitive Investments. We've gapped up off the floor of the rising trend channel there from last July. We did that previously back in October, so maybe history will repeat itself. Top of the channel there up to 18 pence, and we're looking for that by the end of next month, while we remain above the 200-day moving average, currently at 9 pence. On to Kefi, where there was fighting talk in today's RNS, and here that was enough to give us a bear trap gap reversal, which is obviously quite an exciting signal in terms of this stock. 0.58, the old December support, and obviously above that we're looking for up to 0.75, which is post-December resistance for the shares. Ideally, we get an end-of-day close above 0.65 and the 200-day line, but it is not essential. A wild card suggestion in the form of MGC Pharma, where we see the shares up a whopping 5%, but just the feeling here that we've got a rising trend channel base, top of that channel there at 30 pence, so that's quite a nice target maybe by the end of next month. The reason for inclusion today is we've had the solid candle there at the beginning of the month, opening at the low, closing at the high, and then another one after a sideways shuffle. One would assume that whoever's buying in there is not doing that by accident, something which I said at Renalytix, which you'll see later on in the video. And above recent resistance, broken resistance at 19 pence on an end-of-day close basis. 30p by the end of next month is possible. Moving along to another situation, which is perhaps one to follow on a charting basis and less fraught, Microsolt. And here it has been one of the best IPOs of the recent past, going up and staying up, which is what we like to see. Previously covered this and suggested that there could be a move towards the £1 area. That was derived by the lines which I'm going to try and draw now again, which the upper parallel of that resistance line, and that in this case would be hopefully a target for the end of next month. Support initially came in at 60, which is where we were hoping for it to do, and currently looking for the support to come in at 65. So above 65 in looking for £1 for Microsolt by the end of next month. That should obviously eventually help Tech Capital, which is a major shareholder there. Moving along to Pensana, and here it's been a slow recovery for the shares. Looks like we've got a V-shaped bull flag bouncing above a now rising 50-day moving average and the 200-day moving average as well. Above that 200-day line at 26 pence we're looking for, and we're still looking for up to 35 or 36 pence, ideally by the end of this month. Nice RSI rebound on neutral 50 as well. Gives us the idea that this is a turnaround, as well as a mini bear trap island reversal, so gapping down and then gapping up during the course of this month today. I think there was another gap there back in January. So hopefully this is a major turn for Pensana. If you are a fan of the shares above 35 pence, looking for the shares to fill that gap up to 55 pence sometime later in the spring. Stock which seems to have got one or two people still excited, unbelievably, is Premier African. We seem to be watching the clock now, seeing when the company can deliver. We had a test of that old broken resistance line there from back in June, around the 0.28 pence level. Above that, we've been looking for 0.4. We can probably now upgrade that to 0.46 and the 200-day moving average, ideally by the end of this month or a bit sooner. Next up is Quantum Blockchain, and here obviously the clue is in the name in terms of being a revival at this time in the crypto cycle. The shares breaking the 50 and 200-day lines, and after breaking neckline resistance of 1.2 pence, the view now is that, which is what we had before, we're looking for 1.9 pence by the end of this month, especially if we can get a decent close above the 200-day line and a 1.5 pence today, and strong candles there in recent sessions. On to the star of the show by quite some margin. It's Renalytix, covered here for the first time on Friday. Well, after a while, for the first time on Friday, around 14 pence. We're just breaking that 50-day moving average, and the reason for that was the bear trap gap reversal. So the shares leaving a little gap off the low. Well, that tends to be one of the best signals around, bear trap gap reversal, and it's taken us not only to the initial target there at 25 pence, which I was probably looking for by the end of next month, but also up to the 200-day moving average at 64 pence. That's also the level of the old October resistance. So we'd like to see an end-of-day close above the 64 pence level. If we can get that, the best-case scenario target would be up to £1.40 by the end of next month. Otherwise, it's probably back down to the gap there from back in October around the 48 pence level, so the early 50s perhaps, as support, which is obviously where the shares have started earlier today. Moving on to the last three. First one is Serabi, which is slowly pushing ahead. Here you can see that we're breaking into new higher territory with a V-shaped bull flag, and looking for the stock to hit the top of that broad rising trend channel at 70 pence by the end of next month. Tinybuild is next, and this seems to be one which is looking decent within a rising trend channel base, sort of slow, steady progression. We've got those three very strong candles. Well, today, obviously, the market opening at the low and closing so far. It's currently at the high of the day, but having that charting pattern, or the candle pattern, very strong, above 5.6 pence, which was the initial January resistance, looking for an easy 9 pence by the end of next month, maybe by the end of this month, especially as we're back above the top of that gap there from December at 6 pence. Finishing off with Wildcat Petroleum, where we're waiting for the big announcement. In the meantime, shares having another go at the upside. The key here is to break the 200-day moving average around 0.31. End of day close above that, and we could be up to 0.45, not 45 as I suggested in my tweet. And ideally we stay on the right side of the 50-day moving average, currently rising at 0.24. That's it for me today. More updates tomorrow.